Happy New Year, traders. It is Sunday, January 3rd. I'm doing some research for next week. I want to start the year off like I did last year. We're going to find some trades. A year ago, January 2nd, we had the market gapping higher right out of the gate. We had a gap reversal. The open failed, made a 50% return on some SPY puts that I had bought. Great start to the year. I had mentioned that in my video, and the way that I concluded the year last Friday, I'm going to put up my chat room because I want you to see that these are trades that are actually done, and you can check the timestamps. On Friday, I bought some GILD lottos. That means options that are going to be expiring in a few minutes. I bought the $58 calls for 7 cents. That was about a half an hour before the close. Lots of opportunity for everyone to get in on that trade because the stock did not move right away. Let's take a look at GILD very quickly. This came up on one of our searches. In fact, you can see it right here on Bull Run. That's what alerted me to this opportunity. I saw that the stock had formed a double bottom here and that it was putting in a really strong day. And all that I really cared about was the fact that there was this big bullish engulfing pattern on very heavy volume on the stock and that it was near its high of the day with an hour left. You can see this is the last hour of trading, but it had already surged higher here on really good volume. So right in here, about a half an hour before the close, the stock is below $58. I think it was at about 57.75 or so. Just out of the money for these $58 calls. So I was able to buy them for 7 cents. I sold some of them for 21 cents. That was a 200% profit. And I sold some of them for 28 cents. That was a 300% profit. So in aggregate, I made 250% on that trade. So my first trade of the year was a 50% winner. My last trade of the year was a 250% winner. A lot of you have started following me on YouTube. Thank you. I appreciate it. I hope that you gain enough confidence to come in and try the free trial so that you can see these trades real time. Just look at the comments that are posted below my videos, and I think you'll get a sense that this is legitimate research and that this is a systematic approach that really works. So let's see if we can find some trades. We've got to go and take a look at the market first, see what that looks like. I do want to mention one other thing here before I get started, and that is that this year I'm going to have a model account. And there is my model account. It's with Ameritrade. There aren't any special commissions. So this is your standard rate that I'm going to be applying to all of my trades. You can see I'd actually hoped that I was going to be pulling money out so that it would be an even $10,000, but there was some kind of little margin balance in there. In any case, I'm starting with less than $10,000 so that those of you who don't have large accounts can see that this style of trading will actually work longer term, and it's a really great way to gradually build your account throughout the course of the year. As my account grows, I'm going to be allocating more and more per trade because I'm going to use a standard 10% account allocation per trade. I don't envision having more than 10 open positions at any one time, so this model should work really well. So you'll be able to track our performance throughout the course of the year and all of our open positions because I will be posting this on my website, so you'll be able to see how we finished the month. Let's take a look at the market and see how that's setting up for us. SPY really hasn't done a whole lot going into year end. It treaded water, and you can see fairly tight compression in here. We've got an upward sloping channel that has formed. That channel is right here, and there's the lower boundary of it, and the upper boundary you can see right here. These channels tend to persist for quite a while. My experience is that you get some type of blow off top with 2 or 3 really strong candles, and we could see that to start the year. We have a Senate runoff that's going to be taking place on Tuesday. That is a market mover. I believe that the market has priced in that Republicans will retain at least one of the 2 seats. If that happens, they will retain control of the Senate, and the Trump tax cuts, which is all the market really cares about, will be preserved. So I see that playing out. That could be what gets us through the upper end of this trading channel. But eventually, when you get those breakouts like that, that's a buying climax, and you will see a reversal on the backside, and then there's a chance for us to head sideways. So if you haven't watched my 2020 year in review, please do so. I do get into more depth about how I think Q1 is going to be playing out. So in general, we're going to start the year off probably pretty quiet. I don't see a whole lot driving the market as long as those election results come in, as I just mentioned in Georgia. So we're going to take a look at some searches here, see what we can find, and I'm going to run a search that looks for a particular pattern that we've been trading recently, and you're going to notice some changes in the platform already. So you'll see here that the HA continuation 2 plus, what does this mean? Well, we've been using the Heikin-Ashi plotting method to find trades, and there is a particular pattern that we found to be successful, and that is having 2 or more flat bottom candles, green candles in this case because we're bullish, and that indicates that there is a fairly strong trend that is either just starting or that is already well underway. I've also marked heavy volume yesterday, and you'll notice that this is an add to the platform. I have heavy volume yesterday and heavy volume today. Now, heavy volume today measures how much of the day has elapsed, and it evaluates how much volume has traded on that stock relative to what it normally would have traded over a 20-day period to that point in time within the day. So this is a really good search to use through the course of the day. Heavy volume today, and you can see stocks that had heavy volume yesterday and are strong out of the gate today. Really, really good search criteria, especially when they're combined with other variables like this HA continuation 2 plus. Now, the reason that I decided to go this route, because we had some different variables a week ago that we're testing, I want to see a stock that has had more than 2 flat bottom green candles, because that tells me that it's been in a trend for quite a while. This HA2, this only looks for 2 flat bottom green candles, no more, no less. And that allows us to find these trades when they're just starting to get going. That could be a continuation pattern or it could be a reversal pattern. I'll talk more about this throughout the course of the year. Very, very powerful search variables that we can use though. If I look at HA continuation 2, and I mark that bullish on a daily basis, I've also marked strength versus the SPY on a daily basis. Also very good variable. So we've got strength versus the SPY. We've got our HA indicator showing a strong trend. We have good option liquidity, and we have heavy volume yesterday. If I use all of these search variables, these are the stocks that I came up with. There are a lot of really good picks in here, but I'm going to focus on one in particular, and we're going to have a couple of spreads that we're going to try and get off this week. I'm recording this Sunday morning, so I do not know how the futures are going to open up the year. Here's a caveat. If you see the S&P 500 down 60 points Monday morning, don't do these trades. Please use some common sense. We need to let the dust settle on a pullback like that to make sure that there's not something more to it. But if the market opens down 10 S&P points or 20 S&P points, I'm not going to fret. I'm not going to worry about that. So provided that we have a nice sanguine open to start the year, these will be good trades to take a look at. So as I went through the list, I really liked COST, Costco. Let's take a look at that one. I'm going to double click on that symbol, bring up the chart, and here's what I like about it. You can see that the stock had a downward sloping trend line right here that's been violated to the upside, and we'll draw that in so that you can see it right there. As it broke out above the trend line, it also closed above the 50-day moving average. All right, so we've got two indications of strength. Nice long green candle closing on its high, and we've got some follow through here. Stock looks like it wants to challenge the high. I believe that the support level right here at $360 is going to hold. That is just above the $355 price point, which is the 100-day moving average. And you can see that the stock started to find some support there. We also have a longer term upward sloping trend line right here that comes into that 360 level. I'm drawing it visually for you. So we're going to key off of that 360 level. So I'm going to put up my option chain and I'll show you the first trade of the year that we're going to try and get done. So on Costco, you can see that this is the one standard deviation is the red line, two standard deviations is the blue dotted line. We're well below both of those. We've got a couple of support levels that we can lean on. We are going to be selling the Costco January 22nd expiration. So both of these are going to be January 22nd. We're selling the 360 puts. We're buying the 357.50 puts. And because there is $2.50 between the strike prices, you know that I want to get a 50-cent credit for that. If I'm able to get a 50-cent credit for this spread, I'm going to generate a 25% return. Now here's how the model account will work. I've got to put up $2 for this trade. $2.50 between the strike prices, less 50 cents received, $2. If I'm using $1,000 per trade and I have to put up $200 per trade, that means I'm going to be doing 5 contracts. So that's how it works. I'm going to be doing 5 contracts of this spread in the model account. But when I put it into staged orders, it will show up as 1 contract. Why? Because I want you to decide what's right for your account. When you click submit, it routes that order to your brokerage firm. If there's any snafu along the way, it's only for 1 contract. But once the order is routed to your brokerage firm, you can adjust the quantity up or down to your liking. And this also makes it very easy for you to route that trade. Since we're on this page, you can see there's nothing. It's a blank slate. We are starting from ground zero. We had an Amazon spread that expired last Thursday, and that cleared the board for us. And you'll also notice that there's another trade in here. We're going to be looking to sell some NIO puts, a bullish put spread. So let's take a look at that trade right now. And I'm going to bring up the custom search engine. And instead of using, before I do that, let me just go through and let me put up the HA chart so that you can see that. So if you're in Option Stalkers, the very last series will give you that plot. Now, here's what I was speaking of. Is you can see that when the candle has a flat red top, it indicates that the trend strength is very strong. Here you have a classic, what I would consider to be a classic reversal. You have a flat red top, you have a doji, you have a flat green bottom right there. So in this case, we've got a couple of them together, a couple of flat bottom together, and in fact, we've got 1, 2, 3, 4. So remember, this came up on the HA2 plus search. And that's because we've got a number of these together. So very, very effective search tool, but yes, it would have also come up under our reversal search, flat top red, doji, flat bottom green, classic reversal, especially when you're getting through a downward sloping trend line. That breakout above it shows you that there is really nice strength in it. So let's take a look at another search variable that we can use. We're going to go HA2 on this one. So that means that there are only 2 consecutive flat bottom green candles. And we'll click scan. And you're going to see a lot of really nice stocks on this search also. So if you just click through it, it doesn't take more than 10 minutes to get through this chart. There are a couple of things that I'm going to highlight on this one actually, but I'm going to go right down to the one that I want to trade, which is NIO. And this is going to be what I would consider a pie in the sky order. And I'll tell you why. You can see NIO, 1, 2, nice little HA candles here. Downward sloping trend line comes down through here. We have a breakout to the upside. And we also have big support here right at the $40 level. And you can see that visually. Horizontal support, I'll put up the crosshair. 1, 2, 3, 4, right? 4 lines of support at that $40 level. We also have a nice upward sloping trend line here. We also have double bottom, higher low, so the stock pulls back. We have a nice breakout to the upside right in here. You can see the downward sloping trend line right here. I'll draw it in for you. Starts there, comes down here. So we have a nice breakout to the upside, but we get a little bit of a retest right in here, which is fine. That gives us a double bottom, higher low, nice little upward sloping trend line. It solidifies, it confirms the support level right here at $40. So let's take a look and see what we can trade on NIO. And here we're going to go out. We can go right into staged orders, and you can see we're selling the January 22 37.50 puts, and we're buying the 35s. So let's go into trade. January 22nd, go down to the 37.50s. We'll click on those, click on the 35s, and you can see that that spread is bid at 3 cents, offered at 62 cents. Now we want to get 50 cents for this, because there's $2.50 between the strike prices. So you know that I'm going to be doing 5 contracts in the model account. Now, this price is way away from where the stock is currently trading. 3 cents bid, offered at 62 on that spread. We are ask side on this, which means there's not a very good chance for us to get filled unless we get a pullback in the stock. Now, if the stock pulls back to $45 or so, it being at $48.74 on the close last Thursday, at $45, we'd have a pretty decent chance at getting filled on this. Now, for both Costco and for NIO, these orders are both good through the close of Tuesday. I don't want to be flapping in the wind on a Senate runoff that could have a market impact. If we're not filled by the close Tuesday, you will cancel both of these trades. This is going to be a long year. We're going to have a great year. There is no reason for us to force trades right out of the gate with the market at an all-time high, trading at a PE of 40, with the coronavirus still spreading like mad, and with the vaccine inoculations taking longer than expected. Perfection is priced into the market. There is no reason for us to force trades right now. When the time is right and we have really good opportunities that are set up, you're going to see me swing and swing hard. We're going to be nailing trades very, very aggressively. This is not that time. So I'm going to take off the HA indicator and go to a regular candlestick pattern. You can see that heavy support right there at the $40 price point. This stock moves. This stock has gone from $55 in a week down to about $35. That is a 20-point move. That's why we have really nice option implied volatilities in this stock. But we should also know that it moves. I want to have an order out there in case we do get a drop on Monday morning or Tuesday morning down to that $45 price point. We still have the 50-day moving average to lean on, and we still have horizontal support. Notice that in both cases we're selling January 22nd options, so we're going to have about 2 weeks worth of risk exposure on this trade. So I want to keep my spreads inside of that 3-week window so that I can constantly evaluate market conditions and so that we can maximize accelerated time premium decay. We want to have both of those working in our favor. Obviously, we want to find the best stocks and the strongest stocks. So those are 2 trades that we're going to be trying to do. Both of them are in the staged order entry screen. And I'm going to bring this back very quickly. And I'm going to show you another trade that's set up really well. I actually like Qualcomm, but I found the option bid-ask spreads to be way too wide for us to even try anything there. And if you get in on a stock and they fill you and the bid-ask spreads are wide, it just makes it harder to try and get out of the trade. But I'm going to show you another one that I like, and I'm going to be watching it. GILD. There are a lot of reasons I like gold in here, and I'm going to compress this a little bit so that you can see these patterns a little bit sharper. If I zoom out, you can see this downward sloping trend line right here, and let's draw that in. I'm not doing a trade on gold, by the way. This is one of my losing trades from last year, so once bitten, twice shy, but I'm going to be watching it very closely. You can see this long downward sloping trend line right here that's been violated to the upside. You can also see this nice upward sloping trend line right here that I will draw in for you. It is a wedge formation. We do have a stimulus bill that has been passed, and we've got another one that's being discussed that would send $2,000 to every American. That's a lot of money. That's $500 billion. The printing presses are running full steam. Gold is the anti-dollar, meaning when the dollar decreases in value, gold goes up in value. And so that's really what I'm taking a look at. It looks like the Senate and the House are going to try and get a $2,000 deal done if they can. It's not set in stone yet. We'll see what happens. But you can see that it does have this nice breakout through the wedge formation, and it also is above the 100-day moving average. And you've got this horizontal support line right here. I'll use the crosshair tool for that. You can see that nice support right in there. 1, 2, 3, 4. That was breached right in there. That provided resistance. So this is also a nice support level around that 175 level. I think gold is going to move higher. If you see that the $2,000 stimulus checks are going to go out, you can pretty much be assured that gold is going to rally. We've got a wedge breakout right in here. Now, we had a similar formation back in here. I had this nice downward sloping trend line right here. Boom, gold broke out. We ended up taking a long position and the bottom fell out. So that was a losing trade for us last year. Didn't feel too good about it. We got out of the trade. We took our lumps. We moved on. This looks a little bit better to me, and it looks like gold is going to find some legs here if we get that stimulus bill. So keep an eye on it. I'm going to be watching it. We'll see. Like I said, I need to make sure that it can get through this 100-day moving average, hold that 100-day moving average. Then I also need to be evaluating the news to see if those stimulus checks are going to get cut. If they are, this is a potential trade for us later in the week. That's what I've got for you so far. Let's start the year off on a very positive note. I really like Costco. I would do that trade. I think we've got a good shot at getting that one done. NIO, we need a little bit of a pullback in the stock. If we don't get filled on either one of them, we're going to cancel the orders at the close Tuesday. We've got the Wednesday night video coming up. I'm sure that I'll be knocking through a bunch of stocks. We'll have a little bit more clarity on the Senate runoff, and then we'll be able to be a little bit more aggressive with our trades. Thanks so much for watching, everyone. If you like this content, please give it a thumbs up and make sure to subscribe to this YouTube channel so that you never miss any of these videos. You never know when I'm going to post the videos, but what you can count on is that in each one of them, there are going to be some great trade ideas for you. Good luck to all your trading in 2021.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.